So I was actually enjoying sitting on the panel here and seeing some parallels in the stories. Interesting to hear about JOGMEC is a great partner. They're also our partner in South Africa and have been a reliable partner for many years as the Japanese government. It's also interesting to see robust projects with great shareholder support, and that's a common theme I think you'll see behind these companies, that excellent opportunities attract excellent shareholders. Our largest shareholder is HCI, a fund in South Africa, and they own 31% of the stock. So again, a parallel. I'm pretty confident that actually we're the largest reserve that you'll see at this conference today. So we have 19.5 million ounces of reserves and about 33 million ounces of resource. So we control this asset. It was discovered by us. And our ounces aren't the gold ounces we've just heard about at $1,500 or $1,600. These are palladium dominant ounces, and the basket price on February 21st was $2,226 an ounce. So a couple of disclosure slides, as everybody does. So we have two parts to our business, a joint venture with Impala. They're about the third largest producer of PGMs in the world. They own a $4 billion smelter in South Africa, and they've been our partner, bought into the asset at the asset level. They bought 15% for $30 million in cash before we defined the reserves here. It's palladium dominant. We do have to be a bit apologetic about our mine life. In South African context, it's only 45 years. And we have a construction decision coming up here right in front of us. And in fact, a couple of days ago on Thursday, Impala announced that they're going to pick up 100% of the project costs to advance the project forward and make their final construction decision after our mining right is granted, which we expect imminently. I won't have time to talk about it today, but an interesting technology part of our business, we founded a partnership with Anglo American. They're the largest producer of PGMs in the world, and we're putting PGMs in a lithium battery, and we have the intellectual property for that nailed down, and it's in a private company we own 52% of, and Anglo owns 48%. The reasons you should be interested in us right now are that our mining right is expected to be granted very soon. We've completed about 135 public meetings, and we've filed about 80,000 pages of documents, and we're in position now for this mining right to be approved. And the Impala option deadline is now 90 days after that mining right. So they'll have 90 days to make an election whether to take up control and operation of the project. The next milestone would really be the decline establishment and the start of production in Q1 2024. We've put the decline at Q1 2021 with the mining right being granted in early 2020 as we expect. That start off could come quite a bit earlier. What's different about this project is it's thick. So we discovered it off the north end of the north limb, and the panels here are 40 meters by 20 meters by 20 meters, so 40 meters high. So just imagine the size of that off that wall here inside the room. That's probably 6 or 7 meters. So we're talking about dropping a 13-story office building at a time, and that compares to 1 meter thick in the standard South African mine. And the palladium dominant is also a unique feature. The deposit starts 140 meters from surface. We're very thankful that 140 meters of cover rock was there. That's what kept it undiscovered for the last 80 years. And the concentrate goes straight into Impala's smelter, so it doesn't have too much or too little nickel and copper. It's actually an ideal body to put into Impala's smelter. We have about 1,000 square kilometer land position. A lot of discussion about South Africa around just an example of another investment next door to us. The Mogalakwena mine, owned by Anglo American, is an open pit. Their plan is to produce about 1 million ounces a year there, and their margin will be more than $1,000 an ounce. So they'll make about $1 billion a year at that mine, and they do have a respectable reserve life of 100 years, not like ours of only 45. So you're looking at the cost curve in South Africa. Those narrow 1 meter mines, pretty interesting numbers on productivities. So very big challenges for conventional mining at 1 meter thick. The productivities there are 2 to 3 ounces per employee per month. If you compare that to the Eastern Limb and Zimbabwe mines, they're at about 5 to 8 ounces per employee per month. The dark purple bar there is Stillwater, just for comparison, and the narrow purple bar is North American Palladium in Canada, which is going to come up here in a second. Mahalaquena is there at the bottom of the cost curve, and we're right next door to it. This is a head-to-head comparison of us to North American Palladium, and that's important because Impala just bought North American Palladium for $750 million in cash. And head-to-head, North American Palladium was 3.5 million ounces of reserves. We have 19.5 million ounces of reserves at a better grade with an all-in sustaining cost at less than North American Palladium. And after the market debacle of the last couple of days, we're down to about $120 million in market cap. So we're trading at about $11 an ounce. This is from Impala's annual report, and it shows their portfolio of mines and their plan to reduce production at their deep production in the conventional mines in Rustenburg. And it plots by Impala where this project would sit in terms of their mines. So it would be the lowest cost, shallowest mine that they have, with the average depth being around 400 meters, but starting at 140. A lot of people think palladium moved up pretty quickly, and it did. That's based on something from China, not a virus. It's actually the catalytic converter. They changed the standard in China to increase the loadings per car by 20%, and that's driven up the demand substantially. We think, and Anglo agrees in their slides, that the hybrid will probably be the power choice, and that gives you about a 20% increase in loading again going forward. Yes, the commodities moved up. We did the original pre-fees at $966 a basket ounce. We're 63% palladium, 29% platinum, 6% gold, and sadly only 2% rhodium. Rhodium, by the way, has gone up to about $11,000 an ounce. I mentioned some of our shareholders at the start, and that JOGMEC has invested in the asset level. Hoskin Consolidated is actually the pension fund of the Textile Workers Union in South Africa. So we have a very strong, empowered holding company as a shareholder. Production rate in the feasibility study, 420,000 ounces, steady state. Cash cost $640 an ounce, basket price $2,200. Highest we went on the feasibility study was 20% up. That gave you a 27% IRR. Another common number that came up earlier was a 30% IRR. Interesting how these projects at that sort of IRR attract strong shareholders. Current basket price is about a 30% IRR. First production from underground is slated at 2023, and first sale of concentrate in 2024. This is the current shareholding at the asset level. We own 50.02%. In order for Impala to go up to 50.01%, they have to spend the first $130 million building it and simultaneously buy 12% from the Japanese JOGMEC company for $34.8 million. This financial evaluation is kind of interesting. It shows the project generating $210 million of cash flow annually for the partners, about 32% asset level, that'd be $70 million a year for us. However, that's $1,000 palladium a go, roughly. As I mentioned, the timeline to be plant commissioning in January 2024, and that could come forward. Our market cap structure, 62 million shares outstanding. We do have some debt. We have a $20 million secured facility from Sprott and a $20 million convertible. But against the asset that we have here, $120 million market cap. So we're trading at something like 9% of our 8% of our 8% discount NPV. Milestones are right in front of us, which is the option by Impala, first the mining right, then the option by Impala, and the construction decision. Thanks very much.